Assalam Alaikum. In the previous video, we learned about one of the three main financial statements, the balance sheet. Today, we will learn what an income statement is and how it can be drafted. An income statement gives us a summary of a business's revenue and expenses over a specific period of time. Income statement mainly focuses on revenues and expenses. It is also reported on the annual report of a company. Income statement can be made quarterly for 3 months, semi-annually for 6 months, or yearly. And it tells us how a company has performed during that particular period. Or to put it simply, it tells us the profitability of a company or that particular period of time. The basic equation of an income statement is revenue or sales minus expenses, which will give us a profit or loss. It is also called the statement of profit and loss, or the statement of comprehensive income, or the statement of revenue and expenses. There are two ways for making an income statement. The first one is called the basic income statement, made by a single step format. And the second one is called a detailed income statement, made by a multi-step format. The single step format is just written as revenues minus all the expenses, which will give us a net profit or net loss. This format is not commonly used as it does not contain the necessary information a shareholder seeks, while the multi-step format is more common in practice. So, to create a detailed income statement, we consider an example. First, we write the name of the company, then we highlight that it is an income statement by writing the statement of comprehensive income, or whichever name you want to call it, it depends on the organization. Then we specify the time period for which we are drafting the income statement, and then we go into the main part. First, we write revenues or sales, which are, for example, 100 million. Then expenses, and break those down into the following categories. Costs of goods sold. It is the amount of raw material and labor that go into the primary product of your company. By subtracting cost of goods sold, which are 35 million, from sales, we get gross profit of 65 million. From the gross profit, we subtract the selling and admin expenses that is concerned with the administrative and office department of your company. It includes the depreciation, salaries and wages, etc. By subtracting selling and admin expenses, which for example are 20 million, we get operating profit, or also called earning before interest and tax, EBIT, of $45 million. Then we subtract the interest expenses of 5 million from EBIT, and we get earning before tax, or EBT, of $40 million. Let's say our company pays a tax rate of 40%. Then by deducting 40% tax rate from the EBT, we get our net income or profit, which will be $24 million. To wrap up our income statement, most companies also include EPS, earning per share, after net profit.